My name is Jo, and I work for the Organic Trade Association as the Farm Policy Director. And I am joining you today from snowy Vermont. Thank you for having me today. I'm going to present on the USDA Organic Transition Initiative. I'll go over the funding, where it's going to go, how it's being administered, and I'm going to direct you to the places where you can take action to tap into those resources. It's a big program. A lot of the parts are in various stages of development. Some are very early in development, and some are already being implemented that you can get benefits from without lifting a finger. First, a little bit about OTA. We are a membership-based association for organic farms and businesses in the US. We have the mission of growing and protecting the organic sector in the US, and our members represent the full value chain of organic, all food and fiber types across all 50 states. And our priorities really emphasize the critical issues for organic. We do a lot of legislative and regulatory advocacy, also international trade and market development, communications, education, market analysis, mostly on the consumer retail side. We're the ones giving you the $63 billion number for the size of the US organic sector. And then we also work with our sister organization, the Organic Center, to support research on the benefits of organic. Okay, so let's get into the program. The USDA Organic Transition Initiative is a $300 million investment over 5 years to support farms transitioning to organic and current organic farms expanding acreage, with the goal of strengthening organic markets. And this is the largest investment ever made by USDA in organic agriculture. The details were officially announced in August of this year, but we have been anticipating this program for over a year. In fact, I think when I joined you all for your conference last year, we were estimating $200 million. So in 1 year, we've already seen the program grow by $100 million, which is pretty cool. The program advances goals of the Biden administration for USDA in 3 areas: supply chain resiliency, climate smart agriculture, and rural developments, and organic does all 3. Funds from the program will be targeted in 3 areas, with $100 million going to each area. First area is technical assistance and mentorship. Second area is direct support for farmers in the areas of conservation and crop insurance. And third is in market and supply chain development. The programs will be administered across multiple agencies at the USDA. The Agricultural Marketing Service, which houses the National Organic Program. The Risk Management Agency is where all the crop insurance is happening. And then NRCS, which is where the conservation programs happen. So the next slide I'm showing you is a snapshot of where's the money going and which agency is administering it. The first row is the $100 million Transition to Organic Partnership Program. And I'll go into each of these areas in a little bit more detail. The second row is the $100 million for market development. And then the last 3 rows are cumulatively $100 million for direct support to farmers for conservation and crop insurance. And unfortunately, this program is going to introduce a couple of new acronyms like TOP and TOGA. So I'm sure you don't need any more acronyms in your arsenal, but here we go. Okay, so let's talk a little bit about the Transition to Organic Partnership Program. This is the primary delivery system of technical assistance to transitioning farmers, and it also includes benefits for currently certified organic farmers, which we love to see. The National Organic Program is responsible for rolling out this program. They have established cooperative agreements with 6 organizations that are serving as leaders in 6 regions across the United States, 1 leader per region. And those lead organizations will build partnerships through subcontracts with other organizations throughout the region to deliver direct farmer training, education, and outreach activities. The NOP has communicated the responsibilities and activities that these partners are expected to deliver. One is to build farmer-to-farmer mentoring networks. This would involve connecting transitioning farmers with mentors during the transition and for at least 1 year after certification. And those mentoring networks must pay the mentors for their service. Also, this program requires the partners to provide technical assistance, training, and education broadly through community events or other delivery systems that should involve training of mentors and also other technical assistance, workshops, field days that would cover any range of topics from organic production practices, certification, business development, and marketing. These technical assistance programs should be helping producers overcome the challenges of transition, whether it's technical production or cultural or financial shifts. And also, this program is going to ask these partners to support organic workforce training and education through partnering with educational and training institutions in their region. Who are the lead organizations? I'm going to get to that on the next slide, but I want to make sure you all know how to get involved. If you are a organization or a mentor or a farmer wanting to get involved in this program, there is a form on the USDA website where you can indicate your interest. And at the end of my presentation today, I'll drop a link in the chat to a 1-page overview that will provide you all the information and all of these links that you can just click around on. Okay, so here is a map provided by the USDA about how they are organizing this transition to organic partnership program. There are 6 regions identified by the bright orange line, and each region has a mix of states that are either well represented in organic, indicated by the darker green colors, and states that are underserved or underrepresented in organic, which are the lighter green and the white states. So the NOP has tried to organize the regions geographically and also to ensure that each region has a good mix of states that are strong and are growing in the organic opportunity. There is 1 lead organization per region, and each lead is a certifier because that's who the NOP has the closest relationships with. So the NOP has picked 1 certifier, the largest nonprofit certifier in each region. In the Mid-Atlantic and Northeast region, you'll find that PCO is the lead. In the Southeast, QCS is the lead. In the Midwest, MOSA is the lead. In the Plains region, OCIA is the lead. And in the Northwest, Oregon Tilth is the lead. And in the West and Southwest, CCOF is the lead. And these leads have already started developing their partnership networks, all of those subcontracts that are going to get at all of the pockets and needs and different areas where all of the technical assistance is going to need to be delivered. So the partners on this map are the ones that the certifier already had readily available partnerships with and could hit the ground running developing those subcontracts. But there's going to be more partners to come because the goal of this program is to get organic technical assistance to the underserved regions and underserved populations. And so there are gaps that need to be filled. And so developing relationships and partnerships to fill those gaps is going to take time, and it's an effort worth putting in. And so this map will grow with lots more partnerships. Other technical assistance that will be delivered through the program, the NOP plans to provide technical assistance resources online through an Organic Assistance Resource Center on the USDA website. So that'll be publicly available to any transitioning or organic farmer. And then NRCS is planning to establish more organic experts across its regional technology support centers. So we're happy to see that too. All right, switching gears to market development. This is a total and $100 million effort administered by the Agricultural Marketing Service. The program will support development of more new and better organic markets by providing resources and certainty for farms transitioning to organic and for existing organic farms and businesses that can expand production, expand processing capacity, including access to processing, storage, distribution, and consumer markets. And this is super important because without providing healthy markets, we need to make sure that as more farms transition, there's going to be markets for those products without straining current markets. And each sector is going to be handled differently. So how will the funds get rolled out? The USDA is planning to set up a grant program to support targeted market development and supply chain infrastructure. This is a program that is still under development. It has not yet been rolled out, so they're still building it. The program is going to target regional and or crop specific markets to ensure meaningful impacts. And this is important because market development is not one size fits all. Specific sectors, commodity types, and geographic regions have different needs and must be supported through targeted programs and resources. So USDA is actively exploring which are going to be the target markets that they will prioritize for funding. The NOP held a listening session last month and accepted comments from stakeholders about the priority areas. And they posed questions, where are the target areas, at what dollar level should grants be made to have the most meaningful impact? And they presented their thinking on the targeted areas. So that's what you see listed here. These areas were informed by various feedback that USDA has received to date. The Organic Trade Association has been providing information to the USDA for over a year. So we're happy to see some of these areas that we had been promoting for prioritization. First, organic grain and feed, good for this group to hear, including soybean meal, canola, alfalfa, suncake, many others, with the goal of building domestic supply and the associated processing capacity. We heard from Henry, there's a big opportunity for domestic production to fill that import gap in many of these grain and feed markets. So this would be an opportunity to reduce reliance on imports and mitigate the impacts of the international organic feed markets. A second area of prioritization is legumes and rotational crops, because building processing capacity and consumer markets is important for adding cash value for those rotational crops that are so critical to a successful organic system. And then there's other areas like organic ingredients used in manufacturing consumer products that need more support for domestic production and processing to achieve consistent quality, consistent quantity of those ingredients like sugar or peanuts that are needed for lots of consumer products. Dairy infrastructure needs support for new paths to market in response to domestic surpluses and the fact that farmers have lost contracts with processors in certain regions. Fiber markets, cotton and hemp, need support for processing and marketing to support domestic production. So those were the areas that the USDA is currently, it's currently on their target list for prioritization for these market development grants. And they're looking for other ideas. So we also identified opportunities in fresh produce for supporting supply chain infrastructure for flash freezing or storage, and then also meat and poultry slaughter and processing facilities. USDA is also exploring the funding levels for these grants. Right now, their thinking is providing grants from around $100,000 all the way up to $2 million per grant. So it could provide, a nice range of scales. So what can you do right now is stay tuned for opportunities to apply for these grants. Start thinking about your value chain and where you could potentially benefit from a grant to support storage, processing capacity, or other ideas. USDA is also looking at providing funding for commodity procurement. So that's, for example, finding ways to get organic food into school lunches, which we'd love to see. All right, let's move on to direct support for farmers through crop insurance. $25 million of the funds is already being rolled out by the Risk Management Agency. You're going to see automatic discounts in eligible billing statements for crops in transition to certified organic. There will be 10 percentage points of premium subsidy. For any organic grain and feed crop, there's going to be a $5 premium assistance per acre. And for anyone with a whole farm revenue protection program, there'll be 10 percentage points of premium subsidy. This is something where you don't have to lift a finger. These assistance premiums will be automatically applied in your statement.
Hey, Joe, there was a question I missed from the last section about market development and infrastructure. Is the money available there to pay for real infrastructure development, like grain bins, aggregating facilities, stuff like that? Or is it more diffuse? Or can you speak a little bit about that?
It's for any supply chain infrastructure or market development. The only caveat that the NOP said is you can't use it for certification fees, because that would duplicate the certification cost share program. But other than that, anything related to infrastructure, supply chain, transportation, storage, processing, that's pretty broad.
Gotcha. Thank you.
Sure. All right. In the NRCS side of things, NRCS is rolling out a new conservation practice for organic management. NRCS has lots of conservation practice standards for a wide range of activities, and I bet many of you are familiar with one or more of these. So NRCS is developing a new one just for organic management, and it's going to address the activities on a certified or transitioning farm that might not already be covered by other practice standards. Some examples would be, the unique composting requirements under the organic regulations, preventing commingling of organic with non-organic, any sort of practices you employ in that regard, livestock, outdoor access and grazing, and temporary confinement. All of those activities can get covered under this new conservation practice. Other areas where funding will be available for you if you're implementing this conservation practice, you can use the funds to hire a consultant to help you with your transition. You can use the funds to set up your record keeping systems. Most interesting to my eye is looking at using funds for foregone income, because we know that financial risk of a transitioning operation, especially if you're experiencing a yield drag during transition before accessing that organic premium. So that's a pretty novel opportunity that I hope many folks will get a chance to take advantage of. A caveat with this conservation practice standard is as with all conservation practice standards, they are implemented on a state by state basis. So you have to work with your state NRCS office to get this program implemented in your state. Right now, it's currently only available in Vermont. So an action item you could take if you're interested in this, contact your state technical committee and advocate for getting this program available in your area. Okay, and then lastly, just taking a look ahead, this is a big program. It's got a lot of great stuff in it, a lot of good opportunity, but it's only temporary. So we're looking to the next farm bill, which is right around the corner, to really formalize and provide continued funding for key elements of this transition initiative. And with that, I'll say thank you so much for having me here. Stay in touch with any questions. And I will drop a link in the chat to a handout that you all can take with you, and it's got my contact info on it.
Awesome. Thank you so much, Joe, for taking the time to give the presentation and be involved today. I really appreciate it. There was a kind of a procedural question from the chat about OTA writ large. Now we all understand that, you know, even organic farmers have to pay into various checkoff programs, but there is no required checkoff program for the OTA. Just wanted to clarify that point.
Yes, confirmed. However, this program, like the market development and promotion, can achieve a lot of the end goals that the original concept of a checkoff program can deliver. It's just for having USDA foot the bill, which is great.